Yes, ladies and gentlemen, thank you all for coming and welcome to Business Credit 301 Trade Lines and Financial Statements. Okay? In Business Credit 101, we talked about how to make your business credible in the eyes of the lender, right? That's setting up your business. In Business Credit 201, we talked about the business credit reporting agencies and how important it is to review your credit reports in order to build business credit. And today we're going to talk about Business Credit 301, the trade lines, and the financial statements. Okay? So, once you get to this point, you got your business set up credible in the eyes of the lender. You understand the importance of the business credit reporting agencies. Now, we're going to get vendors that are trade lines, right? So the vendors are easy, right? I'm not going to talk that much, but on my YouTube channel, you can see all the details I got about getting these trade lines, right? But we're going to start with the net 30 accounts, in which we have to get a little bit of credit. They give us a little bit of credit, right? And when we get something on credit, we have to pay it in 30 days, right? The net 30 accounts, right? We get some of those, which will lead us to the revolving accounts, right? And the revolving accounts don't need you to pay the total in 30 days. They give you a minimum amount to pay each month, right? That's where you want to be. Now, the idea with business credit is to get 10, at least 10 trade lines. I'm just trying to tell you, at least 10 trade lines indicating that you pay on time. When you get to this level, right? And you want to go and make a substantial purchase, right? Then what you want to do is be prepared. You definitely want to be prepared for what's going to happen, okay? Um, so you're going to need to show them, just like I tell you about the three C's, right? I tell you about the three C's of credit, which is the three C's of funding, which is credit, collateral, cash flow. If you have all three of the C's, then you could possibly qualify for a SBA loan. And by the way, they're not doing any SBA loans at this point in time because the government is closed. Okay? If you get two of these three C's, then you could possibly qualify for a term loan. If you have one of the three C's, depending on which one you have, cash, credit, collateral, there is money available for you right now if you have one of the three. If you have none, then you have to start with business credit. And as you build business credit, then you get access to more and more funding. Now, once you get to a point where you got this business credit set up and you want to make a purchase, you want to go buy a truck or something, right? They're going to look at these three C's. So now you got one of the three C's. You got the business credit, right? Now, sometimes they want to flex and they want to get this money. So if you can convince them that you're legitimate, then you have a better chance. And ways to show them that you are legitimate is to have financial statements readily available. Okay? And I'm gonna go over some financial statements with you right now, just so you can understand what you need to be putting together because a business has these financials. They do them monthly. Most businesses do them monthly, but they could do them quarterly or they could present them yearly. All right. But most businesses do these financial reports monthly. And I'm looking, you see me looking over here, right? Because I'm trying to, I wasn't ready. All right. And I'm trying to get to this financial statement that I want to show you. Okay. So let me take one moment, right? Just to get to where I can show you this. Because I moved them, the ones I wanted to show you, I moved them, and now I gotta find them. All right. Okay, but we're gonna be talking about the financial statements. We're gonna be talking about the balance sheet. We're going to be talking about the income statement. Hmm. Um, Shoot, let me do this. I apologize, y'all. Let me find this. All right, these financial statements. I want you to take a look at what the financial statements look like, right? So you'll know this is what you got to present to lenders, all right? Okay. This is a balance sheet. Let me see if this is a good one right here to show y'all. Let me see. All right, I'm gonna share my screen so y'all can check it out real quick. All right, here we go. I'm gonna show you. This is rough, rugged, and raw, y'all. This is rough, rugged, and raw. I'm not doing no clipping, no stuff like that. Okay, okay. Now, um, a lot of times they do want to see 3 years of activity. Okay, so when you get trying to get this type of money to like buy a truck or something, they want you to be in business at least 3 years in most cases. So they want to see what your business has been doing, right? So what we're looking at right now is what they call the balance sheet. Okay, it's the balance sheet for the time December 31st. Well, this is for 3 years. You see what I'm saying? December 31st. At the end of December 31st for each of these years. 2023, 2020, 24, 2020, 25. Okay, now on the balance sheet, you are seeing the assets are listed, your cash, the property that you have, and this is what they're looking for. They want to see how much cash you got. What you working with? Your accounts receivable, how much people owe you, right? Notes payable. These are little small amounts that you owe people, right? They want to see your property, your assets. That's part of your assets. Then you're gonna want to see your furniture, your vehicles, your equipment, your accumulated depreciation. This is all on the balance sheet, right? Now let's go down some. You got the liabilities, right? Your liabilities, your current liabilities. That's your accounts payable. This is what you're paying out, right? Um, your accrued expenses. That's some advanced accounting stuff. I'm not going to cover that right now, but we're going to go down to long-term liabilities, right? So this is stuff that you're going to be owing longer than a year, right? So these are long-term liabilities. Down here's your equity. You got your capital stock, your paid in capital, dividends paid, retained earnings, and your net income. They're gonna be looking at that net income. And you know where that net income comes from? It comes from the other financial statement, which is the income statement, right? So we're gonna look down here at the income statement. This is the income statement. Boom, boom, bam. We're looking at 3 years income statements, right? So the income statement is basically the money you get in, right? Your revenues, right? Your total revenues for that time period, and then all the expenses that it took for you to get this money, right? Your operating stuff, this stuff you're doing every month, okay? You got salaries, equipment maintenance, advertising, bank charges, anything, whatever you're spending money on goes in this list right here. Then you get the total expenses. You subtract that from your total revenue, and that gives you your net income. And your net income goes to your balance sheet up there in the equity section. Ladies and gentlemen, it's very important that when you are getting ready to go get funding, that you present your business as when it's like a business. This is my business. What? And we do. I learned, though, this is a secret. I learned this business credit from a guy that he had me doing these financial statements so he could go get loans. Okay. So if your business is operating, you should have some financial statements. That's the that's the basic rundown here. Okay, you should have some financial statements, and that's what they look like. That's the income statement, and you saw the balance sheet. All right, ladies and gentlemen, that's my time for today. Make sure you get your free guide on how to build business credit at businesscreditbuilder.com. us. And if you're watching on this on the YouTube, you know the deal, right? Subscribe on that joint, right? Word. Later.